This is the June 30 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Matt Bennett. He's at agmarket.net. Chuck Shelby joins us from Risk Management Commodities, and Jacquie Voeks is here from Total Farm Marketing. Commodity Week is a production of Illinois Public Media. It's public radio for the farming world. You may find us and listen to us on demand anytime you'd like at willag.org or search us out in your favorite podcast application. In fact, there's a podcast page at willag.org where you can just open up the players and you'll find a way to subscribe to us in many places like Apple Podcast, Google Podcast, Spotify, Amazon Music, many others. And if you happen to be subscribed to us and you use an Alexa or a Google at home, you can just ask those devices to play the Commodity Week program, and they're likely to do that. Thanks for trying that out anytime you get the opportunity. Let's start with a normal question from me to each of you, which is to give me a list of items that we should discuss for the day. Beyond the reports that were released on Thursday, the acreage and the grain stocks numbers. Matt Bennett, what's on your mind for the day?
Well, I think one of the obvious things is how big of a role weather's going to play moving forward. I want to talk about it a little bit with the other panelists, first of all. And second of all, the Supreme Court ruling today actually, I think, had a pretty big impact on the market. I think we can talk in more detail about that.
Chuck Shelby from Risk Management Commodities.
Will the recession, it looks imminent, have an impact on our commodity markets and especially maybe into the meat markets also?
And Jacquie Voeks.
Well, I'd like to talk about managed money and the index funds, the impact that they have, and calls from the Dow have, as well as the relationship between crude oil and December corn.
Matt Bennett, let's start with this Supreme Court ruling. It has to do with EPA and coal, but I don't understand why it impacts the agricultural markets. Can you tell me?
That's a really good question, Todd. And quite frankly, I think that it's open to interpretation. One of the main things is that, there's some fairly large implications, as far as any big decisions made by federal agencies moving forward, which would include EPA. I think that it's basically going to hamper EPA's ability to issue new regulations on power plants, things like that, renewable diesel plants, and quite frankly, the interpretation that several people wrote about that I was reading about in the marketplace is that it's not necessarily friendly, for renewable fuel situation or renewable energy, because they say it's kind of a slap in the face to the Biden renewable energy plan. Now, again, it's open to interpretation, but whenever you see the type of numbers that we saw today, yes, it's month end, but there's no question in my mind that there's more going on than a report, which the trade guesses actually nailed on the head whenever it comes to corn.
Well, let's go through some of those numbers. Jacquie Voeks, if you can recap the numbers for both the acreage and the grain stocks reports, probably grain stocks first and then the acreage number I know we're going to want to talk about.
Right. Well, on grain stocks, they came in with corn at $4.346 billion, slightly higher than the average guess of $4.33, and higher than last year's at $4.1. Beans came in $971, higher than the average guess of $959. Last year we were at $769, and wheat came in at $660, higher than the average guess of $655, and last year we were at $845. I'm going to add to that, Todd. One of the things I always look at is on-farm stocks, and I think this is interesting because farmers are holding 48.8% of the corn compared to 42.4% last year, 34% on beans compared to 28.6% last year, and wheat 14% compared to 16.8%. And the one thing we're aware of is a lot of times when a commercial has more than 50% of the grain, it usually limits how low we'll go. Doesn't mean that we can't go lower. On acreage, 89.92 for corn, average guess 89.69, 49, 88.3 compared to average guess of 90.4. That was probably the biggest surprise. And in March, 90.96, and wheat 47.09 compared to 46.89. Last year we were at 47.35.
So the big number there that surprised the marketplace was the drop in soybean acreage. Jacquie, I don't know that anybody was really expecting such a large drop, or any drop in the soybean acreage for that matter. However, it played in the market for a while, and then, of course, as Matt suggested, something else got in.
Right.
And so there was a big range on Thursday in the soybean market, wasn't there?
Oh, it was huge. And I think some of what impacted the market, special comments that the USDA made also, that as of June 16th, we still had 4 million corn acres and 15.8 million bean acres intended to be planted. And now we know they're going to collect the info in July and publish any of those changes if they need to be in August. So it just kind of kicks the can down the road a little bit again and continues to add concern on one side. But I think in addition to what Matt was talking about, the soybean market today was they were waiting for China to come in, because they said that they've relaxed some of their COVID restrictions, and we haven't seen that. And so, being the month end, it really wasn't surprising that China didn't come in, but the market was definitely disappointed.
Well, let's continue down this vein, Chuck, Shelby, and I do want to talk about the midday weather forecast, the forecast we heard on the closing market report as well, that suggested there may be some rain coming in. How much did that play in the market on Thursday?
Well, I think that was early on in the day that the trade had seen that forecast, and I think their critical question becomes, does it really happen and how much? I mean, we've seen these forecasts before. For a lot of farmers in the Eastern Corn Belt, it's becoming really critical to get a significant rain. And I don't know that we're really going to see a widespread 1 to 2 inch across all of Illinois, Indiana, Ohio. But when you're going into the 4th of July weekend and there is rain forecast, I think that did weigh on the market early on. But I think, as Matt has mentioned, there's other factors that really pushed this market harder than it should have to the downside.
Like what?
Well, I think the concern about we're going into a recession, and I think the Fed's policy of raising interest rates, to some folks there's concern that they're going to go too far, and really, in a recession, consumers don't spend as much money and they pull back. And I think, again, that lines up with the idea that how high is high enough, and do we need to be at price levels we were before a month ago.
This leads me to the managed money question and where they are in the marketplace at this time, Jacquie Voeks, and what the expectation might be from them going forward.
Well, we know when you look back in history, a critical point for the managed money is about 240,000 long. If we consider it kind of the tipping point, and that's where they are right now. And so I looked back and said, well, how much did they drop when they went below 240,000 long? In 2014, they dropped 80,000 long contracts. 18, they dropped 390,000 contracts. 19, they never even made it to 240. They made it to 170 and then dropped 470,000 contracts. And in 21, they made it up to 400 long, but then dropped back to 230. So they dropped 170,000 contracts then too. So to me, I think it just points out how vulnerable we are. And, they're very methodical about the way they do things. Index traders, who are, Chuck is talking about inflation, index traders have been a big help to us. They've added 270,000 corn longs since 2020. But when they go the other way, in 2008, they dropped 230,000 contracts, bang. 2010, they dropped 170,000 contracts. And, we're dealing with people that don't have the physical commodity like our producers do. It's all about money.
And because it's all about money, how much of an impact does it have? I know short term and when they go the other way, but how much staying power does that other way have before the market finds and seeks out an equilibrium with the cash market?
Well, if you look at the index funds, it took from 2012 to 2020 for them to come back, and they went down and down and down and down. If you look at the managed money, it's usually a yearly thing. They will reach a high, push back down over that year's time, come back up again, push back down. So it's a much shorter term position than what the index funds would be. The index funds really are inflation hedgers. So we're not always faced with inflation, especially over how many years now. And so the managed guys, that's a whole different story.
Matt Bennett, Jackie mentioned that USDA had made note that there was about 4 million acres of corn, 15 million acres of soybeans that had not been planted yet, and that they also made note that they would be resurveying South Dakota, North Dakota, and Minnesota. Part of that has to do with those acres. Some of it does not, because the 15 million acres includes double crop soybeans, which go in later anyway. The folks at FarmDoc went back and checked that number. It is 6 million acres larger than it was last year, so it's not an insignificant change in that. They'll update those numbers in August. That's what they've been doing in recent years, so that's nothing new. We'll see those in the crop production WASDE figures at that point. But my question is, on those acres, do you think that they got put into the ground, or will they show up someplace else later? I suppose it would be in the prevent plant numbers, which are already pretty big.
Yeah, I mean, the thing is that I saw some people trying to put a bit of a bullish spin on this 4 million and 15 million, but I think you got to be really cautious there, is to think that there'll be much more prevent plant. I mean, Todd, good Lord, you had these corn trading 750 and beans trading 1550 with the time people were making decisions on whether, do I push this, do I plant in the mud, what do I do? And 750 corn makes us do dumb stuff. That's all there is to it. And so I'm not so sure that you can make the insinuation that acreage will go down from here. In fact, I'm not so sure that we might move up a little. Now, is it going to be quality production? Yeah, I mean, it's awfully late in the growing season, first of all, into what I would call not ideal conditions in the areas that are being resurveyed, especially. There's definitely some challenges there. So my personal opinion is based upon just the 4 million and 15 million, relatively speaking, I look for an increase in bean acres. Could you see one in corn? Possibly, but if you do, I don't think it's anything close to what you would look at for beans. 88.3 on beans looked a little shy to begin with. And so I kind of feel like these bean acres are going to come up. And it's a good thing, because quite frankly, you plug 88.3 into a balance sheet, it doesn't work worth a darn. And so, yes, we're going to have a lot of production out of South America. Yes, there's going to be demand implications here, but there's just no doubt that it's a fairly tight situation. I think you're going to see, when it's all said and done, that several of those acres, they made insinuations on this report. I don't want people to think that we could add 4 million or we could add 15. That's not what they were saying. But they're making some assumptions based upon those acreage figures. And what I think is, when it's all said and done, you're actually going to pick up a few bean acres. Who knows? Maybe you pick up a few corn acres. But I do think that making the assumption that they go down is probably not the right way to go here.
I want to follow up with you and then get an idea from Chuck Shelby as well on this one. On today's program for the Closing Market Report Thursday, you're our regular analyst, and you said it was not a good sign that the acreage number was bullish, and the bean market, while it rallied sharply, finished sharply lower. What issues do you see there?
The problem is that if you would have told me this morning that we were going to bring bean acres down to 88.3 and no beans were going to close down 20, I'd have said that's crazy. Now, obviously, there's a lot of other things going on here. Corn had a horrible day. Obviously, energies didn't perform worth a darn for reasons we've already talked about. There's a whole lot of other factors going on, but whenever you take bean acres down 2.7 million acres from intentions and over 2 million acres from the average trade guess, your typical response is not a 20-cent lower move. And so, yes, I see some issues with that. When you start looking at, for instance, the chart, I mean, obviously, there's a lot of things to look at there. We've kind of built some steam here lately. You went up and you tested the 100-day, but we did not close above the 100-day, and I'm not so sure that that's going to be a pretty big force to get through. I think the only way you get through it right now in the short run is that you're really going to have to see help from Mother Nature. So I think that if you do end up with a warmer, drier forecast, all bets are off. You can start talking about some more fun stuff than what we saw today.
Chuck, if you'd like to follow up and maybe talk too a little bit about production in your area. You're in Indiana, Lafayette, not very far actually here from Champaign, Illinois, just 90 miles to the north and to the east, home of Purdue. What are conditions like, and then what you make of that drop in the acreage figure for the soybeans?
Well, I've pretty much traveled from the upper end by Lake Michigan all the way to southern Indiana to the river in the last 2 weeks, and you get south of Crawfordsville, Indiana, and southern Indiana is just in pretty poor condition. As Matt alluded to, a lot of crop was planted into wet conditions. It's late planted, and I see fields that either they're super late planted or they're going to be prevent plant. I also traveled this week over into Ohio. Ohio's got a similar problem, if not worse, than where Indiana is. So overall, it's a very stressed crop, and we haven't had much rainfall, high temperatures, and to really come around and try to have a halfway normal yield, we're going to have significant rainfall going forward in the next 6-8 weeks. Market-wise, that wasn't a good performance, but I think those outside factors were overpowering the fundamentals. I do believe, though, when you look at that 88, and that's what the trade's going to trade off of on those acres, if you lowered the yield just a bushel or a bushel and a half, it has a major impact on the carryout. So that sensitivity going forward, and a forecast that's not perfect by any means. We haven't got to the July report where the USDA is going to project the yield. So bottom line, a lot of negativity here going on. But I think at the end, fundamentals of what the yield is going to overpower whatever the other things are, at least in the short term in the next 6 weeks.
Did today's report, and I'll start with you, Jackie, and then work through everybody, Matt, and then back to Chuck. Did today's report change the tone for the marketplace, the feeling of the marketplace because of today's reports, Jackie?
Well, I think one of the things that we have to take into account when it comes to today's report also is this is the end of the quarter, the end of the month. So it's very hard to judge from a performance standpoint as to exactly what was going on. But I think there's a sense of relief that we have this report out finally, and have whether it's right or it's wrong, it's here and we have something to work with. The thing that kind of surprised me is, they dropped North Dakota's corn acres by 1.1 million acres. And, when you look at that, you say, well, holy cow, I would have thought they'd have dropped more than that. They only dropped their bean acres by 600,000. And so I go along with both what Matt said and the same thing in talking to people from the northern tier, Minnesota, North Dakota, South Dakota. There was a tremendous amount of planting that went into the mud just for insurance. And so we're not going to know that until we actually get into the harvest time, when you come right down to it. So I think that this market at the moment, and Chuck brought up such a valid point in talking about how sensitive it is to recession. And I think that's the key, because we've been seeing managed money as well as the index funds shedding demand-based commodities just because of the fact that they're fearful that we will go into recession. And so to answer your question, do I think it changed it? I don't think it hurt it any more than it was prior to the report. I want to see what tomorrow's trade looks like when we're into the first of a new month and a new quarter.
Well, I think that a lot of folks came into the report thinking, hey, this might be a little bit of a bearish acreage number on corn, but bullish stocks number. Stocks number came in exactly what you thought it was going to be, and so that didn't lend you any help. But bottom line is, it came in exactly what the trade thought it was going to be for corn. And then what did you do? You took the corn market all the way down to the 200-day moving average, which we haven't been there in I don't even know how long. I'm going to have to scroll back on my chart to find it. But you're talking a long, long time since we've been at the 200-day moving average. And so, I think some people are looking at this market saying, good Lord, if we do end up with a bunch of rainfall over the next week, 10 days, which some forecasts are showing it, are we going back under the 200-day? Now, I think we could flirt around with it a little bit. Quite frankly, I think we've overdone it. I think we're a little bit oversold in the short term, and there's just way too much to learn about this crop yet. Yes, there's some good-looking corn in parts of the countryside, but there's also some real problem areas, as Chuck was suggesting. And so, if you're going to be looking at a 90 million or below acreage figure on corn, I don't think in the grand scheme of things you've changed anything in a major way just yet. As far as beans are concerned, I would probably echo that. We're so far from knowing what bean production is going to look like.
Yep.
We're a long ways away from the integral part of production. And so one thing I would say on beans, you got to keep in mind, Todd, I mean, summer solstice, there wasn't a lot of beans flowering whenever we hit that maximum sunlight temperature, maximum sunlight day. And so my personal opinion is this: if you ask most producers, how's your crop look? 9 out of 10 of them are telling me my beans don't look near as good as my corn, relatively speaking. My bean crop stinks. I've heard that over and over and over. So this bean crop's got a long ways to go. And given the fact that you just reduced acreage, you could probably pick some of those up. But I do think that this bean situation could be quite dynamic if Mother Nature does not cooperate.
Well, I think we'd already kind of headed in that direction. It just was kind of a over-exaggeration. We've seen markets tend to do that, whether it be up or down, the emotions, the momentum. So to me, we exhausted the momentum today to the downside. Again, those technical points. Generally, we're still in an uptrend. There's still a lot of positives out there. I go back to, USDA at 177 tie-in record yield for most guys last year. Things went really well, and it was a very good crop. Most producers I talk to would say they're not even on track to match the record yields they had last year. So in my mind, I think it was disappointing to see the trade follow through like it did. But again, I think it's gone far enough to the downside. And as we go forward, there's a lot of reasons that we can see a market recovery. The big question is going to be how far we go back up, what kind of crop we're going to have. And as we've all talked about, there's a long ways to go. We're just getting into the heart of what is critical to production.
Farmers can see now a good portion of their crop. They're part of the way through the season. They have a crop in the ground, of course, a crop that they can estimate some kind of feeling about what it looks like. How much should they consider forward pricing some of this crop before we get to harvest? And I'll start with you, Chuck, on that.
I think it's pretty difficult here in the Eastern Corn Belt. If we don't get some decent rain and the crop is mediocre here in the East, another factor to consider is what's the basis going to be. The futures may do one thing, but if we're short, we've seen the basis really be strong, especially with the good ethanol demand. So one of my concerns is, how are we going to play the basis here in the East? And it's really difficult to understand, a futures market can drop, but basis could be very good.
Matt Bennett?
Todd, we actually are fairly aggressive all along. The thing is that you've got to talk two different things, physical bushels and what people are doing to protect. And so we felt all along that this was a type of year where you didn't want to get super tied up in your physical bushels, because what if you end up with a hot and dry scenario like a 2012 and you couldn't, you couldn't come up with the bushels that you'd contracted? I mean, this could have been the type of year that you made new all-time highs and then some. And I'm not saying it's over, but it certainly doesn't look like that possibility is quite as prevalent as what it was before. But, we felt all along 30% was a really good place to be on physical bushels. But we also moved to 50% of some sort of protection, price protection. And so, we wanted at least a floor under ourselves. I mean, when you're drastically above the spring insurance price and you're purchasing insurance, I see no reason not to hedge December corn. You're accentuating your insurance program. And so we've had multiple opportunities. Now, I'm not sitting here wanting to talk about things we've already done. Let's be honest about it. Most years, if you're 30 cents above the spring insurance price, you're going to feel pretty good about yourself. And 620, it doesn't look good as 750, but let's be honest. If we were on the way up right now instead of on the way down, we'd be thrilled with 620 corn. So I just want to be a little bit cautious as to throw cold water on a good thing. I'm not saying you go out and get to 50% sold at 620, but because I do think you'll get a little bit of a retracement rally at the very least, depending on what the weather does. But I do like being a fair amount of my production quantified on some sort of worst case scenario whenever you're looking at these types of prices.
And then Jacquie Voeks.
I couldn't agree more. I'll tell you, we have not done a whole lot in physical bushels, just for a lot of the same reasons that Chuck was talking about. When you look at basis out in the countryside, and you know that the demand is there, you don't know what kind of a crop you're going to have, because I mean, it's funny how quickly the market can forget that we were late planted and we're still behind on growing degree days, and yet, suddenly we're going to have. They make it look like we're going to have a massive crop, and so I think price protection is what you've got to do. We're at 50% at least, if not higher than that, just because at these prices, and I think Matt really summed it up perfectly. When you were that far above your insurance price, why wouldn't you do something? And so I just think that it's an absolute necessity. We've done some stuff out in 23 also, just on paper, but I think you just can't guess what may or may not happen down the road.
Now let's get a final word from each of you. Chuck Shelby of Risk Management Commodities. I'll start with you, please.
Well, it was a disappointing day in the grain markets for a lot of producers. Certainly for us in the eastern Corn Belt, weather concerns. Hopefully we're going to get some rain out of this, but it's going to be a difficult market in the next 6 weeks to manage. So use some of those tools that are available to you, and we'll know the answer probably in about a month. But right now, take advantage of what's there, and don't get too discouraged either direction.
Matt Bennett from agmarket.net, your final word for the day.
Yeah, I agree with Chuck. I mean, the thing is, this is not over yet. There's a lot of summer to go through for sure, but let's also run some budgets at the types of prices that we're currently looking at. Don't be afraid to market something significantly below the high of the market if it's still penciling extremely good profit margins. We don't know what Mother Nature's going to do, but if you're one of those producers that gets a 2 or 3 inch rain in the next 3 or 4 weeks and you start to feel extremely good about production, then use that information to help you bolster your marketing plan and lock in, like I said, worst case scenarios.
And Jacquie Voeks of Total Farm Marketing.
Well, I agree with both the guys. Today was a disappointing day, but it's just one day in the marketplace. And I think that the key still comes down to the same thing we talk about all the time. You have to know where you're at and how it impacts your bottom line. It does make a difference what anybody else is doing. And so going back to what Matt just said, if you get this rain, do something. There's no question. Because there's going to be some places that aren't going to get it, and then there are places where it's too wet. So don't compare yourself to anybody else. Just do what's right for your operation.
Commodity Week is a production of Illinois Public Media. You may listen to the whole of our program online anytime you'd like on demand at willag.org, willag.org. Our thanks go to our panelists today, including Matt Bennett, Chuck Shelby, and Jacquie Voeks. I'm University of Illinois Extension's Todd Gleason.